Hello, can you guys hear me?
Yeah, I can hear you. I can hear you.
Yeah, I can hear you. Yeah, so my confusion was basically when price breaks the support zone, then according to ICC, he said when price breaks the support zone in the 1 hour, then you start looking for sales and all those. But then there are times where it will break the support zone, then it will now go back again and break it again to the upward side. So is it that you keep on changing your bias, or which one exactly, which break exactly do you take as the major one?
Mm, I'm a bit struggling to
Did I
understand.
phrase it well? I don't know. Do you guys understand me?
First of all, when you ask a
First of all,
question,
when you
can
ask a
you
question,
mute
can you
yourself so I can
mute
answer
yourself
you? Because
so I can
I
answer you?
can hear
Because
myself in your
I
mic.
can hear myself.
Good. So I think what you are saying, from what I understand, you ask in the group, is that you were asking like, can you ask your question again? Let me understand it fully. Are you there? When you come on.
Okay, let me yeah, let me rephrase. Like, how do you know when to buy, when to take buys, or when to look for sales?
Okay. So now I'll explain this thing using this trade because that's the trade we are in right now, and I will explain to you guys the reason why we are in the trade. Because I guess that's why you are a bit confused. I'll take this off. I'll take off my alerts so that you guys can see the whole screen. I'll take off my alerts. So in case you don't understand Oinye, I'll just give this drawing of the ICC. I don't know if you have watched the videos, but I'll just draw this out so it can kind of hold on. Okay, so now first you need to understand that ICC is just, let's say, here's a zone that price is rejecting. Price comes, bounce off here, bounce off here, bounce off here. Let's say resistance zone. This tells you that sellers are sitting here and they're pushing price down. Then eventually price breaks. Now this is the indication showing you that hey, above this level, price can go this high. You don't trade this indication. The reason why we don't trade it most times is because we don't know how high price is going to go. I guess sometimes you can trade it, but just know that you don't know how high price can go. So you are being cautious. So that's why generally they say don't trade the indication because you don't know how high price can go. Now after the indication, price corrects itself. Now you wait for the correction to end because you don't know if price is done going high because price can come down here and still keep going higher. So you wait for the correction to come back down here to show you that price is back under a level where sellers are in control, have more control, and buyers have control as well. Now, from what you understand here in the past, you understand that above this level, sellers can push price down. Under this level, buyers can push price up. But then above here, buyers have full control and they can push price all the way to this zone. That is what you understand in this particular scenario. So right now you have, like I said, I'm outside. I don't know if you guys can hear the sound on my background, but I'm outside, so I'm not at home. So right now you see above here, what this explains to you is that above here buyers have full control and they can push price all the way up. Now this drop that happened here tells you that yes, above here buyers have control, but at this zone, sellers are sitting at this zone and they can push price lower. So now, after the correction, price starts to break back above here. What do? You wait. Why do you wait? Because you know for a fact that on this zone, sellers can push price down. So you wait to see if buyers are going to win the battle or if sellers are going to win the battle. Now, if buyers win the battle and eventually end up breaking back above here, that tells you that hey, now we are back above here. Now you can buy the trade and target this zone because from what you have seen in the past, above here buyers have control and they can push price all the way back up here. So when price is back here, this is where you enter because your only target now is that you're targeting that buyers can push price all the way back to this zone like it has shown you it wants to do. So you're not guessing, you are doing what price has shown you it wants to do. Price has already shown you that hey, above here buyers have more control and they can push price all the way up here. So now that it's back above here, you only want to take a buy and target these highs. Now let me explain the trade that we are in so that I believe with real charts you guys can get more concept of what I'm trying to say. So let me bring this down here. Okay, so now in this trade on US 30, many people are wondering why we are still in the trade. What is the reason behind the trade? They don't understand the trade. Now I'll start from the 4 hours because that's where I saw the trade from, and that's where I decided to break it down all the way to the low where we entered the trade. Now, if you look at these 4 hours, without being told, you know obviously that price is bullish. We have price making higher highs, higher lows, higher highs, higher lows, higher highs, and even though here there's some inconsistency here, but price is still overall respecting structures. You got you got this structure. Shit. You got you have this structure here. Price is respecting it. You have this structure here. You have this. You have this. Price is respecting all these structures and just making breaking highs and respecting lows, which shows you that in general price is bullish because price is taking out highs and respecting lows. I expect that everyone here right now already know how to know an uptrend when price is taking out lows and is taking out highs and respecting lows. That's an uptrend. So now, seeing what has been going on here for this long, seeing everything happening here for this long, I acknowledge the fact that here is an indication because if you mark this out right now, you're gonna see that here's an indication. Like I explained to you guys before, under this level, sales have shown that they can push price down. So price comes under this level, sellers push price down. Price comes under this level, sellers push price down, showing you that hey, on this zone, there's some sellers sitting at this zone, right? So we wait. Buyers come here, sellers push price down, then eventually buyers win the battle. Then after they broke up, the the price bought up, showing us that hey, above this level, I can go this high, right? We've seen that okay, above this level, buyers have control and they can push price all the way up to this zone. That is what we have seen on the 4 hour time frame. And then all we're waiting for now is a correction. Then price starts to correct itself. Upon correction of itself, price correct itself all the way down here, hits this zone, doesn't go below. Buyers take control, push price up. Sales take back control here, push price back down, but still fails to go below here, showing you that there's strong buy pressure here. This is just what I'm seeing on the 4 hour time frame. Now going down to the 1 hour, where the trade even makes more sense. Here on the 1 hour time frame, what I see on the 1 hour time frame is that on the 1 hour you see that on the 4 hour this was a week. Let me show it to you again. So on the 4 hours this was a week, but if you come to the 1 hour time frame, it's actually a candle closure. So the 1 hour also tells you a new story. What is the story? 1 hour is telling you that hey, above this level, buyers have control. So 1 hour tells you hey, under these levels, sales can push price down, but above this level, buyers have control to push price up to this zone. And that shows you why this happened here. Because as you can see here, price got here, sellers push price down, and then eventually we got a break. So now, seeing all this happening, and then the correction happening, we see price correct itself. Now after the correction, price tries to pull back up, breaks back above this level, and then struggles. But even despite the struggle, because price struggles down here, comes back up again, and then struggles again. But even after all the struggles, I come to realize that even after all the struggles, this support level is still being respected. This zone here, this support level here, is still being respected. So what does that tell you? Potentially this can be a new lower high if price can push up. Now for the fact that price is struggling to break this support above a level where buyers have control, shows you that there is strong buy pressure and the sellers just don't have enough to push price all the way down. Do you guys understand the story, the whole story behind the trade now? So that is the reason why I'm like, okay, we entered this trade here. Our stop loss was supposed to be here. This is where the stop loss is meant to be. And so far, it hasn't hit our stop loss. Price hasn't taken out these swing lows, showing you that buyers are still very much in the market. Must this trade play out? It might not play out for us. This trade might be a loss. But as long as this level is still being respected. For me personally, buys are valid. I don't know if that makes sense. That's like the whole reason behind this trade. Now, what is the reason behind my entry? I already acknowledge the fact that we already broke back above here. 1 hour already broke back above here, broke back above here, right? We are already above this zone. Now, 1 hour made this low, made this high, made this higher low because it didn't take out this low, made this higher low, and then potentially this can be price pushing up for a higher high. So now I go to the 15 minutes time frame. On the 15 minutes time frame, let me take this out. On the 15 minutes time frame, I acknowledge something. When session came in yesterday, first of all had this range happening here. Then after this range happening here, price eventually broke out of the range. This was the breakout. Made a new high, made a high in this 15 minutes time frame because this high is higher than this high, so it made a high, right? Corrected itself. It gave a deep correction, but the correction still respected these lows. So I am like, okay, my buys are still valid. Now after this correction, price starts to build up bullish momentum. This is a high, lower high, a high, a higher low, a higher high, a higher low, higher high, higher. Starts building up momentum on 15 minutes time frame, showing you that buyers are starting to kick into the market and they are pushing higher. Now, from what you already understand here on 15 minutes time frame that happened yesterday, above this level, buyers can push price all the way up here. Now, this is the correction. Now, back above here, what are you expecting price to do? To push price back above into this level. But in general, in the higher time frame, the overall take profit, the overall target is here. And also on the 4 hour time frame, overall trend is bullish. So there's chances that price can get here and keep making highs because this is price has been making higher highs and higher lows, breaking highs and respecting lows. So of course, if price happens to get to this zone, it can of course break this high and make a new high. So that's the whole reason behind the trade. That's the reason why we are in the trade. For me, this level right here is a level where buyers have control, and price has maintained its structure above the level where buyers have control, and sellers have failed to push price down multiple times. That tells me that there is strong buy pressure here, there is strong buyers in the market, and they are just not letting price go further below. Maybe this price can from here turn around and start coming down, but when that happens, then I know, okay, my trade is now invalid. I have to wait for a new setup. But overall, I'm looking for buys. Why? Because overall trend is bullish. The only time I will say, okay, I'll stop looking for buys and start looking for sells is not when this price stays out of this low, I'll start looking for sells. No, it's only when I see this low, because this low here is the last low that was made. The only time you call this a low here now, the only time you will call this zone a low is when this low causes a break of this structure, then this becomes the new low. Right now there's no break of any structure yet, so therefore this is not a low. This is still the low that was made from price. So unless this low is taken out, I'm not looking to sell US 30. I'm looking to buy US 30 because overall it's bullish. But if we happen to see price break out and then sell under these levels, that means that what we are now seeing is now a build up of lower lows and lower highs and lower lows, which means that all you're now waiting for is for price to correct itself, showing you a new signal to sell, and then you can sell price back under this level to keep going down. So that's like the whole context of the trade, and that's why we are in the buys. I'm not saying that the buy is going to play out. Of course, we can lose this trade. As if you risk properly in every trade, you can lose any trade. There's no guaranteed trade. But the whole point of the thing is that this is the reason why we are in the trade, and it makes sense. So ask a question. So for you, like is asking, where do you know how to buy? Where do you know where to buy? You buy price when price is back above the level where buyers have control. You listen to what price is telling you, and just where if price is above a level where buyers have control, you're looking for buys. If price is bullish, you're looking for buy trades. And when you know when to get in is when price gives you an indication, gives you a correction, and then back above that level you're looking to buy. And even if price doesn't give you, because people are asking how do you know to enter when price does not give you an indication. I'll use gold, because I remember we are doing a call last week. Our last call we did on the weekend, try to come to our call so you can see me explain all these things. On the last call we did on the weekend, someone asked me to break down gold. And I was to the person, I was like, the person was asking me, hey, can I enter gold? I think price was around here then. He was saying, can I enter gold here? I told the person, hey, yeah, above this level, let me take this out. So I told the person, hey, above this level, what price has shown you is that buyers are in market. So even though we had a price take out this low, this is still the main low that caused this break of this high. Correction, price pulled up but didn't break this high, so this is not a low. Does that make sense? So this is not a low. A low is only a low if it causes the break of a structure, the break of a swing high. So this low didn't cause the break of this swing high, so this is not a low. This is still the low. Price gave a deep correction and then started buying back up. Above here was a good entry to buy, and I told him that. But if you are not already on the trade, then you can wait to see price break above this level, because this level have shown us that hey, above this, under these levels, sellers can push price down. Let me push this up a little bit. So you see it here. Here, sellers push price down. Comes back here, sellers push price down, showing you that on this level, sellers have control and they can push price down. And I would like to the person, if you can wait, and then if price starts to break above this zone, that means that seeing that we are in a bullish trend, and also price is now above a level where buyers can now take back control, this would be a good place to buy this trade. And the person was like, that means that we are buying the indication, right? I told her, yes, we can buy the indication if it has structure. Now, if you look at this, there's structure here. Let me show you. If you look at this, there's structure here. You have this low, price made this low, made the high, corrected, made this low, higher low, made a new high, made another low here, made a new high, made another low here. All these, if you go to like the smaller time frame, these become structures. These are bullish structures. This is price showing you it's making highs and making respecting lows and making new highs, and then eventually breaks this support level. Some people would get into these trades and like they will have their stop loss. Let's say they will go to the 15 minutes time frame. Most people like the 5 minutes. I don't know why people like 5 minutes time frame a lot. I get skeptical when I get into a trade on 5 minutes time frame. But some people will get into the trade and like, okay, I guess this was a good structure though. So like, cause it was also a high time frame structure. So this trade was like you could like get in as price broke above here. You could like get in here and like have your stop loss under this level. But what happens is that some people will see as okay, it's too big, and then they'll have their stop loss under here. It doesn't make any sense. Do you know why? Because price can take out this stop loss and still push higher. Because this structure was a structure that break caused a break of this high. So this was the correct this is the correct stop loss zone for this trade. Right? So but in general, my point is that the trade has to like make sense. Price has to be above a level where buyers have control. And if price is above a level where buyers have control and we are in a bullish trend, then you can expect that price can keep buying because we are in a bullish trend and also it's above a level where buyers have control. So when you are marking up your charts trading ICC, your markup is just there to tell you where does buyers have control and where does sellers have control. And also you say Onye said something like she looks at price as support and resistance. I prefer that. I think you should call it zones. Price moves in zones. When price takes out, well, it's a battle between buyers and sellers. Buyers and sellers are fighting for who's going to gain control of the market and push price to the next zone. If buyers, let's say here, buyers and sellers they were fighting who will push price to the next zone. Buyers tried to push it up. This was the first zone. Buyers won the battle, push price to the next zone. Sellers won the battle, push price down to the previous zone. They fight here again, buyers win, push it up to the next zone. So basically, they are fighting for who's going to push price to the next zone. It moves in zones. It's just like your. I used to explain this thing with your house. If you live in an let's say in an apartment that has like a story building or a skyscraper that has this story building, when you are in it, above your roof is your zone. When you break your roof, that your roof becomes your floor, and then you're targeting the next roof. It's like the higher you get, the more you want to get higher. So they are fighting for price moves in zones. When price breaks this zone, it's going for the next zone. Breaks this zone, it's going for the next zone. In our trade here on US 30, price um price broke. In our trade here, price broke this zone. It came to the next zone, broke this zone. It made a new zone here. So when price breaks this zone, you expect it's not like it's 100% sure that it's going to happen, but you expect that when price breaks this zone, it's going to go for the next zone, which is this zone here. But maybe I guess you can also say here is a zone too, but there was kind of a struggle around this level. So you can also say here's a zone too, right? But in general, my whole point is that price moves in zones. When buyers, when price pushes, it pushes in zones. When it breaks this zone, it's going for the next zone. Breaks this zone, it's going for the next zone. So that's basically what ICC is all about. Price moving in zones. Buyers and sellers are fighting for who's going to get control. And all you are just looking at is what did price tell you that hey, above here buyers have control, under here sellers have control. What did price tell you before, and how can you capitalize on what price has already shown you? So that's like basically what ICC is all about. I hope I've been able to explain this a bit properly. Does that make any sense?
Yeah, it does. So, from what you have explained just now, based on the past, let me say 2 weeks or so, for the US 30, it has just been buys, buys, buys. Because from the 4 hour, it has been trending up for quite a while,
Mm-hmm.
right?
Yeah.
Yeah. So it's only just buys opportunity you've been looking for in US 30.
Exactly. So like general, we took a buy on US 30, which we lost the trade. Let me find that entry we took. Where was that entry? Okay, I think it's here. Okay, here we took a buy trade on US 30 here last week, which we lost, and I marked out this zone. If you go to the group, you're gonna see it there. I marked out this zone where I was like, okay, if you can see price above here during session, then price can push all the way to the next zone. So price broke above here during session, but then this candle decided to weak us out, and then as I expected, price got to this next zone and made a new high because that was like the anticipation. Because in general, price is bullish, price is buying, and the only time where I'll start looking for sales is when I start seeing sell structures. I would say, right now, this trade we are in is not this best trade. It's not the best trade. I acknowledge that. Why? Because we have price made this high. So like it's good when you are in a trade. You kind of also see the reason why your trades might not play out. Price made this high. You can call this a lower high. You can also call this level another lower high because price came here rejected. Right? So price is making a low, a lower high, a lower high. Right? But the reason why I'm not interested in the lows, the lows, the higher lows, sorry, the lower highs price is making. The reason why I don't really pay interest in it like that for now is because he's making all these lows, but he's making the lows at a level where buyers have control, and also it is not breaking any major lows. So yes, we have this um, lower high here. Price makes low, I guess you might say is a low. Price makes a lower high, equal lows, and then comes here, starts building up this small bullish trend. So it's all speculative right now on the pair. That's why I say it's not the best trade. But in general, I'm still like I'm with the trend. The trend is bullish. I have not seen reasons to sell. This might just be price trying to bring in sellers and then take them all out, because in general I think we are in an uptrend and I'm sticking with the trend. So when you're trading, you also want to stay with the trend because the trend is your friend, right? You want to stay because trend is your friend. Because if the trend wasn't your friend, then this let me sorry. So if the trend wasn't your friend, then this drop here should have been sell should have been going on, right? This drop that happened here, price should have been selling and kept going down. But no, because we are in an uptrend, buyers can still take back control anytime and push price higher. If it was a downtrend, this sells here. This was a low. This was a lower high, low, lower high, low. It should have been going down, but buyers took back control. Can take back control anytime because overall, it's a bullish. It's bullish overall. Price is bullish overall, and you're looking for buys and not sells. So you only time you start to look for sales is when you start to see a clear change in structure, a clear change in where price is going. Example of a clear change in structure and where price is going. You look at here. Look at here. You see how price making higher highs and higher lows. Made a high, higher low, higher, making higher lows. Then comes here, makes a high, corrects itself, tries to break back above, fails, makes a new low, corrects itself, breaks the low it's made, corrects itself, and this is the entry where you get to enter because you have seen that clearly that there's now a change in trend. How do you know that there's a change in trend? This is how you know. When price makes a low, a new low, corrects itself, and breaks its own low. This is the confirmation that okay, sales are now in the market. Corrects itself again, and back under these levels. This is where you are selling the market down. That's how you confirm a change in structure. But what happens is that most people are rushing. They rush into trades. Let me show you an example with gold. Someone in the group on gold was like, I didn't reply, but the person saw this. So the person saw this. Let me go to 15. The person saw this on gold, right? Price made this high or equal highs, I would say, and then there's this low. So there's this low, right? The person saw this and calls this a change of structure, but no, it is not. Do you know why it's not? Because it is not because you haven't. This is just a break of structure, but not a change in trend. The person called this a change in trend, and when price corrected itself back up here, under here, the person was selling gold, looking to bring gold all the way down to here. But change in trend is this: price makes a low, corrects itself, and breaks its own low. This is what shows you that okay, now sellers are in the market. If price corrects again under these levels is where you are selling to target here and potentially price can go lower. That's how you confirm a change in trend. So this is not a change in trend. This is just a break of structure. Is it really a break of structure? I don't even think so. Because this was just equal highs. No new high was made. But either ways, this was just a break of structure, not a change in trend. Trend is still bullish. So you only look to sell a trade for a pair that is so bullish for so long. You're only selling it when there's a clear change in trend. Some people are going to see these red candles and going to be like, is ready to sell. No. Did I say it won't sell from here? It might sell all the way down. but you want to get into a trade that you have chances of winning, and where you can where you want to get into a trade where it's worth risking your money on. That's how you trade. So in general, seeing all this trend, you only looking for sales on gold when you see a clean change in structure, change in trend on the higher time frame. That's when you'll be like, okay, maybe it's time for gold to start selling. I like to use the 1 hour time frame a lot because it's a very strong time frame. But yeah, that's like my overall outlook on this. So when price is in a bullish trend, just be looking for buys, and that's the only way you can catch a swing trade. If you're like trying to hold the trades for long, or catch a 1 to 4 hour trade, 1 to 4 hour, 1 to 5 hour trades usually come when you are with the trend. So if the trend is bullish, you'll be looking for buys so that you can be able to catch a trade that you can hold for that long. Does that make sense?
Yeah,
Yes.
you explained it very, very well. Thank you.
Sure.
Thanks.
Who has like
Okay.
the next question?
But sorry, but so for all this stuff, what I think is the pair also matters because gold, where I see gold for the past, let's say for the past 2 years, gold has been going up. In fact, the only time I've seen gold come down was I think during that 2022 time. 2022 was the only time I can remember gold was selling. So based on this analysis now, I'm thinking that gold is mostly only going up. Gold and the S&P 500 and should I say US 30? So they are mostly going up. So based on this, I think you will only be looking for buy, 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 buy. Because even if they start selling, they don't really. It's mostly corrections. They don't sell for long.
Wrong.
So for
But go on.
so okay, so I think let's say you're trading something like forex now that goes up and goes down all the time. There'll be more opportunities for selling, right?
So I say wrong because first of all, pair doesn't matter. Trend is trend. Let me go to Euro USD. Pair doesn't matter. Trend is trend. Euro USD is not gold. It's not SPX. There's buyers and sellers here. So let's look at this trade. Let's look at this pair. Now, I also took this trade, so I'm explaining it the trade that I took. So it won't be like I'm finding a pair from nowhere and just breaking it down. So now, Euro USD price is making higher highs and higher lows, obviously. So this is an uptrend, right? Then here, price makes this high, correct itself. Back above here, buyers should is have control, right? So back above here, buyers have control. Tries to push price up but fails, and then price makes a new low. This is not a change in trend. This is a break of structure on the higher time frame. On the higher time frame, this is a break of structure on the 4 hour time frame. But on the 1 hour time frame, you can call it a change in trend too, because price has been making lower lows and lower highs and lower lows and lower highs, right? So you can make call it, but let's stick to the 4 hour time frame. So this is not a change in trend, it's a break of structure. Then price corrects itself, starts making higher highs and higher lows. Let me go back to the 1 hour. That's where it makes sense for me. So price corrects itself, was building higher highs and higher lows. Remember, let me stop this. Remember, when price broke this structure, what this tells you is that hey, under these levels, sales have some control. Under this level, sales have control and they can push price lower. That's what this break tells you. It tells you that hey, um, tells you that hey, Under these levels, sales can push price down, right? So now price corrects itself and then starts building higher highs and higher lows. So you have, where is that drawing to? So you have price making high, higher low, higher high. I guess the reason why I wasn't in the sell yet here was because I knew this was a high, a low, a higher high. I needed price to take out this high here, this low here, so that I know that this structure it was building has broken. But no, price makes a equal low, makes a high, a higher low, then eventually makes a higher high here. And after that higher high made, price then comes down, takes down its own structure. This is a break of structure, right? This is a break of structure here. Broke this structure, I don't enter. Corrects itself, respects the previous high, comes down, makes equal lows, goes up, respects the previous high it's made here, respect this high and respect this high, then breaks its own low, confirming that change in trend. Like I told you, how do you know a change in trend? When price makes a low, corrects itself and breaks its own low. So price makes a low here, corrects itself and breaks its own low. Doing that under this level where sellers have control after a break of structure on the highest time frame. I don't know if that's making sense. So now I have this change break of structure on the 1 hour. So I have a break of structure on the high time frame on the daily and 4 hours, and then on the 1 hour I have a change in trend. So what am I expecting now? A correction. Then price corrects itself, respecting this high it's made here, and that's why under these levels we are now looking for sales to sell price down here and potentially down here. And it is since on the higher time frame this is not a change in trend. What's a change in trend? When price makes this low, corrects itself and breaks its own low. We're targeting here to now see if price will break its own low to now confirm to us that okay, now there's a clear change in trend. So now price has broken its own low, there's a clear change in trend. So you would you would be wrong to be looking for buys on Euro USD unless it's short-term buys, because there is now a clear change in trend. And where do we think since trend has changed? Where do we think price can come to? Price could come all the way down here. It can also come all the way down. Here's the first place that it can come all the way down to. You have here first, then after here, then it can come all the way down to this one. But what we acknowledge now is that clearly there's a change in trend. So when you say you get pair matter, that is gold, that no, it does not matter. Trend is trend. Uptrend is uptrend. Downtrend is downtrend. When you don't see a trend, when you're not with the trend, then know that your trade is less likely to play in your favor. So now we have a change in trend in Euro USD. We have seen that clearly price has broken its own structure. So if we are to get a correction into this zone, all we are now waiting for is for price to come back under these levels for us to sell it and keep targeting lows, because now it has switched from uptrend to downtrend. So wrong when you say you get pair matter. It doesn't matter which pair. Trend is trend. Uptrend is uptrend. Downtrend is downtrend. For you to take a sell trade in an uptrend, you need to get some sort of confirmation that that trend has ended. If you find confirmations on the and then if you noticed when I was breaking down this trade, after I got this clear change in trend, right? Under these levels, I was targeting here first. And then I was saying if price can break under these levels, then we can target lower because price is making no lows. Now, why did that target here first? Because we got that change in trend in the 1 hour. So your target should be a 1 hour target. Don't get a change in trend, because some people will now go and see a change in trend on the 15 minutes time frame, and they will having a 4 hours target. You should only have a 4 hour target if it aligns with the trend. If there's no change in trend yet on the 4 hours, then about then you see maybe a change in trend on the 15 minutes time frame, then your target should also be a 15 minutes time frame target. Do not try to be greedy and try to. The only time where you can take a trade on the lower time frame, like 5 minutes or 15 minutes, and then hold it and look for daily ta- targets or so, is if two things happen. First one is that if the trend of the high time frame and the low time frame aligns. Two is if, okay, the trend on the high time frame don't align yet, like we see here. They don't align yet, but on the low time frame we are seeing price is keeps breaking lows. Price keeps breaking lows. So that tells you that, okay, hey, the high time frame don't align yet, but then on the lower time frame price is just making lows, and it keeps breaking its own lows. So the potential that price can keep going down. So trading is a game of probabilities. There's no certainty in the market. There's no it must and it must not. No, no such thing like that. It's all a game of probabilities. So you should treat it as one. So when you are trading, you don't trade in terms of price is here, it must do this. You trade in terms of price is here. What is the probability of this happening over this? And with the information you have already of what's going on, this is where I think I have the most probability to win the trade. You are trying to follow what market is telling you, not trying to predict it. On this trade here, if I was taking a sell, I would be predicting that price will take out this low. It will be a prediction. But I'm taking a buy because even though we are getting this low highs on this small time frame, it's still above a level where buys have control, and it has not yet taken out any major lows. So until a major low is taken out, I'm still bullish. Until your price shows me that sales are ready to get into the market. Would that make sense? Do you guys have any more questions?
Thank
Do you guys have any more questions? All right. I think since no more questions, let me check the chat. Let me see if anybody asked a question on chat. How do I how do I view the chat again? Okay. The chat has 6 chats here. So someone said I took a silver entry last night and had my SL under 15 minutes swing low and got taken out to exact tick. But I re-entered and it went to hit all-time highs. The point I made, where having a 15-minute stop loss can also mean that price can take you out, and you are wondering, is my trade now invalid? I think it can play out again. If you used maybe a 1 hour swing high level to put your stop loss, you will still be in the trade, because you know that obviously where you put your SL is a level where until your price takes me out, my trade is still valid. Until price breaks under my level, my trade is still valid. You sound fine, no back noise. Do you wait for body close above zone? I wait for body close. Most times I wait for body close. Only time I can say you can get in is maybe price is bullish, all trends are aligned, you are in session. When like everything is so clean, all trends are aligned, you are in session, price is bullish, then maybe you can get in without you can wait for lower time frame breaks, like maybe the 15 minutes time frame break instead of the higher one. That you can do. Someone says body closure. Yeah, body closure. You have explained this exceptionally well. Thank you. So I guess
Okay,
that's all.
sorry, sorry, sorry,
I
sorry.
guess that's all.
Sorry, one more thing.
Sure.
There's this stuff you keep saying about like taking trade only in session. What happens if you why do you have to only take it in session?
It's not like it's a must
It's not like it's a
to
must.
mute, please. So it's not like it's a must to take a trade during session. Sometimes you can, like me, this trade on US 30, we entered before session. But the reason why we entered is like I explained to you guys already. Price is already above a level where buyers have control. And also, this was a yesterday trade. It never hit our stop loss. We entered it during session here. It never hit our stop loss. So generally, we are still supposed to still be in the trade. That's why I got in, right? That's why I got in like around deep down here. So I knew, okay, I'm still supposed to be in this trade because my STL is not yet hit. So that's why I got in earlier. But the reason why you trade during session is because that is when there's volume. If you look at here, see all these moves here, all this range here. This was, let me check time. See, this was around Asian session. This was early in the morning my time. Now once New York comes, boom, there's a strength, there's volume, and price starts to move. Same thing. If you look back, here is all Asian. This is when a session comes in. So if you take all these big moves, all these big pushes happened during session. That is because when there's session, there's volume. How I explain this the best is that if you want to go to the market, or you want to go for a shop to run a shop, if you go to the shopping mall at night, you are going to see less customers, less sellers, which can make price a bit more expensive because there's less demand. But when you go to the market during when market is open during the day, when everyone is in the market, you are going to get things at a relatively cheaper price because you can check here. If it's more expensive here, you can check another place. That's the same thing with trading. When you trade outside of session, there's no volume, so you can get fake moves, you can get faked out. But when you are in session and there is volume, price seem to move, price seem to push. Example, US 30 is a US pair. The US stock market opens in the morning, 8:30 a.m. US time. So that depends on what is 8:30 a.m. US time in your own time zone. You should be trading when the US stock market is open because that is when there's enough money in the market. I remember, money moves price. Money is what decides where price is going. For price to break above here, it needs money. And the reason why it didn't break here was because it didn't have enough money. It had to come down here to liquidate more orders to get more money to be able to break this high. It happened that here my entry was one of the orders it had to liquidate to be able to break this high, to make this new high. So for price to break a high and make a new high, it needs money. So money is what moves the market. So you trade when there's enough money in the market because that means that that is when you are going to get best moves, big moves, and quick moves. These two candles here, this was during session. One, two, three candles made this big push. But watch this. Out of session, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 candles. And we are still around the same zone. But once we got in session, 1, 2, boom, we are off. Check here. 1, 2, 3, 4. All kinds of candles. But once we are in session, boom, 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 we are off. So the point is that when you are in session, trading in session, the moves happen quicker and there's more volume in the market and you are less likely to get faked out because price is just going to keep moving on the direction that it wants to go. That's why you trade during session so that you can be able to catch the best moves and possibly quicker. Is that all?
Hey, can I ask you a
Go on, go
sorry?
on.
Okay, my name is Ali Faith from Rwanda.
Okay.
So I'm just I've been following you for a couple of times. So I got a question where
Yeah.
when I'm drawing on a chart, like after making the correction, there is a time the price that when it reaches the higher, the point of high. So when it comes to correct, we are in a bullish example, we're in a bullish trend, and the price reaches the higher, and when it's correcting, it distracts the higher low, indicating that we have to search for the sells after breaking the higher low, the current higher low. So the laser time again, it comes back and it breaks again the higher high.
Yeah.
So where that leaves me with no decision.
That's where
It
I
leaves me with no decision.
that's where I explained like what happened here.
Yeah,
Price made a high, breaks the higher high, comes and breaks this low, and then comes back here and is now trying to break the high again. This is exactly what you asked now, right?
yeah, that's it. That's it. You're correct.
Exactly. So that's why I said this is a break of structure, not a change in trend. I explained it here. This, let me draw it as a diagram. Where is it? Price is making highs, right? And then let's say uh, makes this high. Boom. This is a break of structure, not a change in trend. What is a change in trend? A change in trend is when price corrects itself, respecting these highs, and then breaks its own low. That's a change in trend in that time frame. So it didn't leave you with no option. It just had a break of structure. Price broke structure, but didn't break trend. The trend is still bullish. The trend is only a break of structure is price showing you signs that under this level, sellers there are sellers in the market and they can take control. There's a possibility that sellers are starting to come into the market. That's what a break of structure is. A change in trend is telling you that it is confirmed. It has been confirmed that sellers are now in control of the market. So you want to take a trade when you have a confirmation. So with that being said, so that how ironic that the same thing you asked me was the same trade we took. And I guess if it was you under here, you'd have been in sales. But like I explained now, a break of structure. This is a break of structure, not a change in trend. A change in trend is when price makes a low, corrects itself, and breaks its own low. That's where you now say, okay, we have a change in trend, and now sellers can start taking control in that time frame. I hope that answers your question.
Yeah, I understand it because like I was deciding about these things here. So yesterday I think so I took like a sell, confirming that the price is going down. So it's just wigging me out. It hit my stop loss. So it was just like I said to myself and asked like, how do I decide this? So by confirming this, I understand that if the price is just changing in a trend, it have to make a higher, like a lower low, and if it comes back to that price, we have to sell, right?
For price to change in trend, it has to make a new low, and then after making a new low, it has to correct itself, respecting its high that made the low, and then breaking its own low. If you write it down somewhere, do
Yeah,
it. For price to change in trend, it has to make a new low, correct itself, respecting the previous high, and then breaking its own low. That's how you confirm a change in trend.
yeah, yeah. That's what. Thank you.
You're welcome. Any more questions? Uh, okay. I think no more questions here. Anyways, it's been a good call, guys. I think I'll post the recorded version on YouTube for anyone that wants to watch it again. Anyways, thank you guys and hope you have a great day today. Good luck.